Good afternoon, everyone, and welcome to RenCap's Tech and Fintech Conference. My name is Chibundu, and I am your moderator on the panel discussion with the digital logistics companies. The panel will focus on the digital logistics space in Africa, and the discussion will be centered mainly around expansion opportunities, operational challenges, and how the players see the market evolving. Given the underdeveloped and challenging supply chain environment, especially in West Africa, players will discuss how they intend to maneuver and benefit from the developing markets. Without further ado, I would like to introduce our very interesting speakers, Mr. Tayo, Genco, Leo, Ignatius. Thank you so much for coming here, gentlemen, and we are very excited to hear what you have to say. Today, I'm co-moderating with someone well-versed in the tech space in Africa, and I'll let him introduce himself.
Oh, hey guys, my name is Tage Kene-Okafor. I'm the Africa reporter for TechCrunch. I'm an international tech publication. I've covered, African founders, startups, and venture capital over the past 2 years, and it's interesting to see, the startups we have here today morph into what they are, what they have become now. And yeah, it's glad to be on this panel session. Over to you, Chibundu.
Thanks, Tage. So just heading right into it. So, many consider logistics and mobility as one of the toughest industries to thrive in, especially in countries like Nigeria that have a serious infrastructure and financing deficits. So just could you walk us through exactly what you do, and can we get a definition of the key problems you're trying to solve and how solving that problem has gone so far? I would like to start with Tayo, then Genco, Leo, and then Mr. Ignatius.
Hi, Chibundu. Thanks. Nice to connect with you again, Tage. And of course, nice to reconnect with all the speakers. Yeah, so I'm currently a Chief Operating Officer for Moove Africa, managing operations across our 4 markets today, Lagos, Accra, Johannesburg, and Cape Town. Right, so I'll start with sort of what's Moove. So Moove today is a revenue-based financing platform focused on mobility entrepreneurs across the continent. So to give some context and background to the problem, if you look at Africa as a continent, or look at sort of emerging markets today in Africa, right, we're poised to have the fastest urbanization rate in 3 decades from now. Right, it's rising extremely quickly. So what's happened is lots of people have either moved or moving out to the city across the board. That rate is poised to grow by 3x. And if you take Nigeria as a case study there, Nigeria is poised to move from 10% about 3 decades ago to 50%, right, in 3 decades from now. So that's creating huge, huge gap and huge issues to be solved by the government and players like us. All right. So the question today is that urban mobility has caused a couple of issues and brought a couple of challenges, interesting challenges to be solved by players. The first thing is that lots of people are migrating, and these people who are migrating are either looking for ways to live high quality lives, right, or looking for ways to engage themselves in the system. And it's unfortunate that the rate of infrastructure growth has not, been as fast. So the rate of infrastructure growth on the continent is growing much slower than the rate in population growth. So that's created a gap, huge gap. One is, how do we improve quality of life of people who are making this migration or move? And the second thing is that how do you integrate people into this new economy? And if you look at what that has created, for example, in the last 1 decade, one thing, that's created is there are lots of people who have moved into become mobility entrepreneurs. Unfortunately, a couple of these people, and lots of them are informal players in the system who really want to work, find a way to contribute to moving people around in a better and higher quality way. But unfortunately, right, they've not had that chance, right, just to do this. And what we're doing today as a business is unlocking this challenge by creating vehicle financing opportunities, revenue-based for these sort of entrepreneurs across the continent. And so they were Uber's preferred financing partner, scaled across our 4 markets. But the key is to use existing revenue, right, which is baked into our alternative credit score model. So using history of these drivers and customers on the platform to actually alternatively score them using this historical data and put them into embedded financing solutions to give them, number one, not just tools to work, but also help them contribute to improving the quality and also quantum of life they live in the city.
Okay, thank you very much. That was really interesting. Genco, please.
Well, thank you very much, Chibundu, and Tayo also for the very interesting approach. In fact, well, what Kobo does, where I'm head of structured finance and capital markets, what Kobo does, Kobo 360 actually does is to put together transporters and cargo owners on one platform. So in a nutshell, we are a fintech-powered e-logistics platform. So by this, I mean that a transporter is onboarded, a client is onboarded, and there's a demand for transport from a cargo owner, which meets an offer of trucking services, haulage. So we bridge also gaps, just like Tayo, because it's very important to bridge gaps in Africa. Of course, we suffer of infrastructure problems, but the two gaps that we bridge particularly, one is aggregation, because the offer of trucking in Africa is very fragmented, while the demand is very concentrated. So our platform has the advantage of aggregate that demand, that offer, to be able to serve that demand. So by this, I mean, for example, the mainly what is exported from Africa is raw materials, so in bulk, and what is imported is finished goods into ports, mainly in containers. So you have to move all this, obviously, and that's what we do. And our business model is based on having a fee on the platform or charging the client. So why do we have the fintech element? Is because we believe in the financial inclusion of our universe, especially the truckers, and we believe that there is enormous potential in having them access to cheaper products like cheaper diesel that we can provide, access to cheaper tires, eventually care cards, and in the future also equipment finance, which is truck financing. And that's why also obviously data is extremely important. The building of the data is extremely important. But I'll stop there, I think. Thank
Understood. You. Thank you very much. Leo.
Yeah, thanks, Chibundu. Interesting question. What does Lori do where I work? Very similar to what Kobo does. We're brothers in the terrain. So where do I see that terrain going? I'm sure that Genco will agree with me that as sizable as our growth has been, both of us, we're still a very tiny drop in the ocean called the logistics space in Nigeria, and not to talk about the rest of West, East Africa, and Southern Africa. The space is extremely fragmented. Clients are underserved. Problem of matching these two big players, transporters and client, and facilitating that marriage to keep it seamless is an issue. The background to your question is infrastructural challenges, regulatory framework not supporting this kind of union. Exactly why we have a business, because there is a problem that is set to continue into the foreseeable future. And so all of our business models looked at the pieces of this puzzle. How do we make the transporter happy? It is by keeping his assets optimally utilized. How do we make the customer, the owner of the cargo, happy? It is by ensuring that his goods are picked on time and ensuring fulfillment. What are the key strategic pillars to ensuring that this happens? It is on journey management, via technology, via interface with all of the actors within that space. And so we are engaging not just as a tech company, because tech is a big part of facilitating that process, but Genco, we agree with me that there's still a lot of blue collar elements that still can't be digitized. And we get our hands dirty, ensuring that those blue collar elements are well covered across the floor. So to answer your three questions, the outlook is overwhelming. We can grow 100x, 200x in another 3 years. That's how big the space is. The problem is not going to go away anytime soon. the problem is an African problem. In fact, it's an emerging market problem. And so we have really strong business model that is quite sustainable given that situation.
Understood. Thank you very much. Ignatius.
Okay, hi everyone. Good afternoon. Happy to be here as well. I had strategy and expansion at TradeDepot. Right. I think I'm slightly different from everyone else on this panel, yes. Considering that you're all long haul this financing. We are more focused on the tail end of the distribution, right, which is at retail. Interestingly, currently most of trade happens in the traditional trade, as everyone knows, in all of Africa. Nigeria more peculiar because over 95% of trade happens in traditional trade, right? We have barely scratched the 5% in the modern or more mature trade, right? And what we do at TradeDepot, right, we have built a platform, right, that is built an e-commerce and embedded finance platform for retailers. That's the guys on the long tail, right? To solve the challenges that they face, right, including access to products, access to cheaper financing, right, for inventory financing for their products, right? And we have built this off the back of the fact that we know that some of the challenges that are being faced very similar across board, right, where retailers have to travel long distances to access goods, right? Also, one of the very burning issues that they face currently is the fact that they don't have access to structured financing because it's largely informal, right? And also the fact that the distribution play currently favors, right, because there's an advantage to serving wholesale, which means that you don't take on the cost of having to do the long tail and the multi-point drops, right, for the logistics that's at the tail end, right? Most of the distribution, even in traditional trade, favors the wholesale market, right? So over 78% of every manufacturer's volumes go to the wholesale, right? And that comes with its own challenges, meaning that we have quite a number of middlemen within the chain, right? There's this goods, and with every middleman within the chain comes an additional margin or an extra cost, right, which must be served. So we want to disrupt that. We want the retailers to get the products at the cheapest prices, right? We want them to get them when they want them, right? At the right time, right? We don't want them to have to journey all the way to the markets, which is where most of trade happens, right? And we want them to be able to keep their stores open, help them grow their businesses with a bit of financing, right? And keep them open long enough for them to open chains and grow a lot larger than where they are. So those are some of the challenges that we're trying to solve at TradeDepot. We've leveraged a lot of tech and data, right, in our approach because we see the value of data as a business, and we see the value of deploying tech and having tech data drive most of the decision making within the business. So that's basically a summary of who we are and what we're able to do. Also, I think just to add, right, we've been doing this for a bit over 4 years. We've grown to about having 75,000 retailers on our platform across 3 markets in Nigeria, Ghana, and South Africa. So I think that summarizes us basically.
Okay, thank you very much. That's really interesting, everyone. So I guess this question is more tailored to you, Genco, Leo, and Ignatius. Tayo, you can just hold off on it for now. But logistical risks in Nigeria include verification, data availability, and we are not, there's the obvious trust element. So we just want to understand what are the key operational risks you face in your specified markets. Just like what is the major thing you face? Just we'd like to know. Genco.
Okay, well, thank you. The operational risk, obviously, because there are trucks involved, a truck that doesn't show up is an obvious risk. So you have to have a very good relationship with the truck, being onboarded, the trucker, the driver even. So if you want to make sure that he's reachable all the time and you know what he's doing, he has to have a certain level of tech adoption. So tech adoption is important. And it's not an easy one because the great majority of truckers have Nokia 8810. And so dating from 1987 or maybe 1990. So that tells you that effectively, if you don't have a USSP approach, it's difficult to get hold of them. And then, do they have enough credit? Do they have data? All these issues are one of the problems. Tech adoption, I think, is very important for going forward. So now another operational is not having enough trucks. For example, are there enough flatbeds in Nigeria, or are there enough tote liners? There are a lot of brewers and not enough tote liners to transport boxes of beers, for example, or they are fighting. They want, Heineken would keep some for them, making sure that they are exclusive to them. All these kind of stories that we can try to get into the middle, but it's not obvious because the number of type of trucks is limited also in Nigeria. So that's another operational issue. So I think one last point, when we bridge the gap also is the financing part. I mean, it's not an operational as such, but it could be operational because when the trucker comes to the gate, he needs money to put diesel in his truck in general. So there has to be an upfront payment to fuel. And if the company that hires them doesn't do that, someone has to. And that's the next gap we bridge also, actually. We pre-finance this kind of things.
Okay. Ignatius, over to you. What risks do you face?
Okay, so in terms of e-commerce being still very young within this space, right? We faced between ourselves and our retailers, really, right? You're trying to convert these retailers from the traditional ways of doing things to being more digital, right? You want them to trust that when they order products on your platform, that they get it when you say they are going to get it, which in our case is 24 hours, right? A lot of work goes into that, and the fact that we've largely digitized the entire route to market end to end from order to fulfillment means that from a data standpoint, the accuracy of our data on this retail points, right, needs to be 100%, because it means that I'm not going to send someone to go verify the store while deliveries are being made, right? I need to have done those verifications as soon as the stores are onboarded. So we spend and invest a lot of time and energy, right, in making sure that the data that we capture from these retailers are 100% correct, right? Data from their store locations to their phone numbers and everything, even down to the outlet types and all of that, right? We also have been able to give these retailers some digital wallets, right, which enables them to pay for their products early enough, right, or pay for their products via that digital wallet, right, meaning that we have been able to reduce the cash handling, right, which the drivers would usually have from a traditional distribution standpoint. So these retailers are able to pay money into their digital wallets while deliveries are also being made, and also get deducted from those same wallets if they have a credit with us and a loan or an active credit with us, right? So those are some of the things that we face between ourselves and retail, and some of the things that we've also been able to solve for from a cash handling standpoint. We have partnerships with a lot of financial partners, right? Most notably NIBS, right, for e-bills pay, that allows the drivers go deposit the cash if they have to deposit cash, right, and not have to carry that cash overnight and bring it to the warehouse the next day, right? So those are some of the things that we've done to mitigate some of that risk between ourselves and our retailers, between ourselves and the delivery or fulfillment angle. Yeah.
Understood. Thank you very much. Leo, I want to ask you too. So, I know Genco has really said a lot in terms of operational risk, but is there any other thing you would like to talk about, particular to Lorry, that you face? Just quickly.
It won't be exactly particular to Lorry, given that we're in the same space. However, the biggest risk I'd like to maybe just add is the business we're doing is fulfillment, right? And that fulfillment risk is the biggest of all the risks. Maybe your transport rate, your rates to Kano is say 700K, but you're carrying a consignment worth 25 million. So you need to get that consignment from point A to point B, even though you have GIT insurance and fidelity insurance to cover that loss to your client. You also need to midwife that process in such a way that your rate of fulfillment is high, good quality, on time, all the time. And so investing in that on-journey architecture via technology is a significant part of the investments that we make at Lorry. Trying to get areas of that whole flow that are digitized. But because this industry is completely traditional and you're taking the industry on a journey, you need to calibrate for them and improve the model for them manually before they trust you enough to take your digital solution. For example, Genco mentioned about electronic proof of delivery. A lot of even big multinational companies don't have a system that allows it to happen. You need to take them on that journey and then gradually get them to that destination before you can start integrating technologies. So, however, with what we have done, I'm very proud to say that fulfillment component, we are the risk element calculated over the last 2 years. We've done business in 3 years or 4 years in Nigeria is less than 0.003%. So while it is bigger, much sizable for the industry, for us specifically, the investments we have done has paid off. And we are on a project now to further reduce that by another 50% in Q4 of this year.
Okay, that's very impressive, and I'm looking forward to seeing how it develops. I'm sure Genco is really happy about that, but it's interesting to see how it develops. I'd like to leave it to Tage for the next comments.
Thanks, Chibundu. So my question will be to Moove. Since Tayo hasn't spoken, and I think he'll be itching to talk. So he mentioned something during his intro about the partnership with Uber. What I'd like to know is if you conduct checks independently or with Uber, and how do you make sure, what checks do you put in place to mitigate losses? And also, how do you handle cash payments with Uber, since it's a two-way thing? Yeah.
Cool. Yeah. So I think sort of first background is that I was at Uber between 2017 and 2019 or 20. And I saw this problem firsthand, right? Where there were lots of drivers who are willing to drive and an income, willing to hustle, but, didn't just have access to vehicles, or there was no path to ownership. So this is a problem. So the question is, how do you take, informality, use available data or technology, and sort of create an ecosystem? And to answer a question, right, I'll sort of lump the answers into 3 parts, right, and talk about some of the pillars of our business. I think the first pillar today is underwriting. So how do you do that? Right, today, many of the drivers who drive on Uber are not sort of formally plugged into the system, or you don't find that data in a credit bureau or anything. But what you have going is historical data that you can earn enough from. Right, first thing is that they drive, weekly, right, and there's the data on revenues, right, you can get from Uber. And we're integrated via API, right, and that we inject that data into our credit scoring system. So you get that data, you have, data on their history. You can also check for things like consistency, right? So there's really not sort of open source for them in the credit bureau, but there's something you can work with. So that's the sort of first line of thought for us, right? Taking this entire bunch of data on the driving history, actually using that to, credit score and validate, drivers who pass that test. I think the second, is across our market, just looking for, where there's also proper, credit scoring, either from the government or, third-party sources. The third thing is just open data, right, where it's available in the market too. So sort of taking these 3, anchors and merging them together to form a decision on whether or not a driver qualifies, right, for a loan, and then you can further build on data in that aspect, right. The second part of our model, which is extremely cardinal, is monitoring, and that's somewhere we've invested a lot of our resources with respect to technology. And there are 2 parts of our monitoring technology. I think the first is just the infrastructure that collects data from sensors within the vehicles. right? You can learn things about the driver's behavior, right? Driving speed, understand, safety checks and requirements based on the driver's character and behavior. And the second thing is that we also have a very robust monitoring team. It also looks for things like, where the driver is on time, checks for things like, their score on our system, checks for issues like, are drivers actually, safe and in the right place at the right time. And then just giving, the strength of our partnerships with our telematics partners and the data we can ingest, right? So far, right, where it's happened, where there's a loss or a potential theft, our recovery rate has been 100%. And that's been super. I think the third thing, right, talk about is loan servicing. So the way our business is structured today is that 100% of the inflows from drivers come into us directly, and then we sort of pay our trade waterfall. But in cases where there's a high cash penetration in the markets, drivers remit to us directly. And there are a couple of things we've built sort of in-app on the driver wallet that gives drivers the option to remit. And thankfully today, right, the fintech space or the disbursement space has become much more ubiquitous. So drivers sort of earns that money, right, but is able to transfer either through their bank account or through payment options like, many of the payment channels we have today, digital payment channels, right, which are embedded into our system, right, back, into Moove system. So that gives us sort of the chance to collect that revenue upfront and pay the driver at the end of the week. Just bringing these three together, right, that sort of power of underwriting, also, the power of, our credit scoring system, the monetary infrastructure we've invested in, and the loan servicing system that we have continued to run, right, gives us a very full proof our hedge and has really, created that ecosystem that's protected us from this risk.
All right. In addition or in continuation of what you just said, you mentioned drivers having wallets. So yeah, that's the embedded finance play, and I think Ignatius also pointed that out for TradeDepot. So for the both of you, right? So we know banks have had shortcomings when it comes to vehicle financing or traditional distribution. We know you put in place financing for your drivers to access, for them to keep their operations flowing. Are there additional incentives that you give, your drivers and general stakeholders, right? And do you think your business model is sustainable in the long run? So
absolutely.
I think Ignatius.
Okay. So you want me to go first? Is that what you said?
Yeah.
Okay, absolutely. So I mentioned a couple of things that are interesting about the model and why it's sort of sustainable, both from like a customer LTV standpoint and just sort of the network effect of the model. I think the first thing is the flexibility we bring, right, and access to our paths to ownership, right. So for our customers or the demographic we deal with, these are sort of informal mobility entrepreneurs who can sort of walk in today with no data, and based on just your driving history, right, you can get that into a Moove car, right, and get that financing. So the first thing is the flexibility, whether it's in terms of how you pay, where you pay, or the amount of tenor or the vehicle you have an access to. So that makes it extremely competitive. The second thing, right, to mention are just the competitiveness of our offers, right, in terms of the interest rates. So interest rates today are from high single digits to sort of mid double digits rates in the market. That's sort of 14, 15%. So that makes it extremely competitive. Now, just for context, right, in the informal market and the demographic we're deal with today, right, and I sort of saw this a lot at Uber, right, just because there isn't traditional financing or it's too long or too hectic, the alternative options are super expensive. They're sort of 50% through an informal partner, you're connected with, who really doesn't trust you, and there's no even reliability around this, earnings or this, vehicle or this financing itself, right, which is sort of called the hire purchase model. Nigeria could range up to 50%. So that competitiveness has made just, drivers extremely sticky and brought in that, sort of high LTV and value to drivers. I think the third part, which is important, is the embedded financing solution we have. So today, trade network of partnerships in our ecosystem, right? We have, 4 partnerships. A driver comes into the system, just needs to be screened and scored, right? You have access to a 4 card. We also provide, servicing and maintenance partnerships. We also sort of work on the licensing. We also, have screen-in ads that allow us in and the drivers sort of earn. They also have insurance partnerships, right, for these drivers, and OEM partnerships too. So you look at sort of all these pieces and this sort of point, and when you sort of add them together, there's a huge, deep network effect in there that not just makes us, extremely competitive, but also makes us, really sustainable from an economic standpoint.
All right. Thank you for that. Ignatius, do you have anything to add although I know your business is different, but you mentioned embedded finance for TradeDepot, and I'm thinking okay, other players will have embedded finance too, and the other incentives that TradeDepot provides to drivers and stakeholders in the market, and if your business model is sustainable in the long run.
Okay, great. Speaking of the issues or the problems with or challenges with traditional distribution, I'd do a very quick analogy. Picture the woman at the end of your street, right? No, it's not. Is it?
Okay.
Oh, apologies. Okay. Okay. Can you hear me? Yes, you can.
Yeah.
Yes, we're good.
Okay. Yes, sorry. So, picture the woman at the end of your street, right? A mommy ayo, for example, right? Just for those that don't understand, mommy ayo is almost every store in Nigeria or in Lagos, right? Is named mommy something, right? Because almost over 2/3 of the stores in the country are owned by women, so it's a female-led play, right? Picture how she restocks her shop, right? Sometimes she has to lock up the shop in the morning and travel long distances to go and buy products, right? She pays for the transportation cost to get there. She pays for the transportation cost to load products into a vehicle and transport those products back to her store, right? And we come into a place where also she's only able to work with capital that she's able to gather from family and friends and maybe proceeds from the business as well. How can she significantly grow her business, right, without having to stay on long queues in the bank, trying to bring collateral of the land that doesn't exist or building that doesn't exist somewhere, right? Because she's really informal. Also, she would not have a credit scoring, just similar to Tayo's scenario where his drivers can't have a credit scoring, right? There's no properly structured credit bureau for the informal markets, right? So we have to credit score based on transaction history, right? And a host of other things which form the algorithm that credit scores these retailers, right? And we're able to offer them much cheaper financing, much easier financing, a lot quicker than you typically get. I mean, if a woman has traded with me for 6 months or almost a year, right? And I have that history of her buying history and all of that, it's very easy for me to give her a loan to buy products on my platform, right? Grow her business, also align her, keep her store open, stay in the store, not having to leave the store to go buy products, right? Just goods come to her, she sells, she makes her money. I've taken out the middlemen in the chain, so she's making a lot more profits from buying from us and working with us, right? So that's how we picture that. Those are some of the challenges in a nutshell, right? I think I mentioned a couple of them in the introduction, right? Some of the challenges that we found ways to solve with the data that we're able to harness from offering these services to these retailers.
Well, thank you very much for that. I think Chibundu will have a follow-up question.
Okay, so I think this is multi-lot to Ignatius and then Leo also. So in your businesses, like in your specific businesses, like how do you see the logistics market evolving, and what sector, cement, FMCG, like do you see the most growth, and do you see the most demand from? Leo.
Okay, so that's an interesting question. So the lorry model, the thesis behind it is that wherever there is a cargo to be moved, it should be moved, and it should be moved in a manner that gives us a history of where cargo comes from, where it goes, what cargo it is, what asset types is used for those movements, and over time provides us analytics that is useful for one, developing the space, regulatory, some form of new logistics activism in terms of what quality of road is relevant given the tonnage of cargo that is moving via different routes and all of that. And of course, grows our business. In the outlook for Africa, Africa is growing in population-wise on a daily basis. Food production capacity in Africa is growing on a daily basis. In Nigeria, most of the multinational companies are growing double digits year on year, whether it is in the FMCG, whether it is in the commodity sector, whether it is in cement, whether it is in importation, whether it is in traditional haulage and all of that. So we expect that every single sector, every single segment of the haulage business in Africa will continue to grow at double digits, some even at doubling year on year. Okay, so this is what gives us excitement, and these numbers are not just economic numbers from the National Bureau of Statistics showing evolution over the last few years. It is also coming from our experience. So, for example, we began our COVID recovery in March, and from March to date, we've grown 10x. From month to month, some months we grow 100%, some months we grow 80%. This is just how massive the market is. And so for our business, our expectation is that for the foreseeable future, 3 to 5 years, we should be able to do double the 10x, 20x growth year on year. It's a massive, 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 massive sector that we are so grateful to be pioneers in this space, along with other practitioners like Genco.
Understood. Thank you very much for that. I think Tage has a question.
Yeah, Genco, I would like to ask, so last year during the pandemic, we saw, there were some regulatory moves the government had towards delivery and logistic companies, right? I don't know how important regulation can be for investors when investing in a region. So I'd like to know Kobo 360's relationship with regulators in the different markets you operate in, and how have you been able to mitigate some of these regulatory risks that have come up in the past and some that will come up in the future?
All right, thank you. First of all, I want to thank Leonard for his comments. May I add one comment on the growth potential to Leonard's quite exhaustive approach? Is that one thing, one sector in the logistics, where in the transportation part, where we'll see a lot of growth is the cold chain transportation logistics, meaning that obviously Africa needs more agricultural products to be moved, but the level of post-harvest losses are too big for the moment. And one way to mitigate that is to focus, concentrate, and invest into the cold chain transportation systems in Africa, both in terms of depot and in terms of transportations. So that's one thing. Now, in terms of your regulatory question, we are not really, we're not specially friends with regulators, but for example, what happened during the pandemic, that every transport linked to food transportation was given a waiver by the authorities, both local and federal. And so the people who transport, the transporters who transport, for example, flour or pasta or all these kind of things, or tomatoes, could show a waiver to cross the borders between the states. So at this moment, for example, we don't, if you look at the emissions regulations, right, Nigeria is not really concerned about it too much, right? The great majority of the trucks are dirty. If you consider the standards of Europe and the US, it's a great majority of diesel. There is probably room for improving this by bringing cleaner trucks in the market. Trust me, we are trying to work on it with parastatal institutions in Africa, for example, the IFC or the other groups like this. But there is a matter of cost, of the implication. Of course, a gas truck costs double the price of a diesel truck, notwithstanding the fact that the great majority of the trucks, when they are new, are very expensive compared to the Tokumbo that you can find here. Right? The Tokumbo meaning second-hand trucks, right? So, and those second-hand trucks have the preference of the stakeholders in the market, because the price of transport is the same. From Lagos to Kano is always 700,000, right, Leonard? You can't change that. If it's a new truck or an old truck, it will be the same price. So going further, let's suppose that going further, we want to add more trucks and we want to be a stakeholder in adding more trucks to the market. We will be considering the fact that we will need, for example, a leasing, we will have to comply with the regulations that are needed for owning trucks and being able to lease them out. That's one thing, but that's not in the immediate future. I mean, that's, for the moment, we are very much of an asset-light company.
Okay, thank you so much for that. I know it's a different dynamic, but Ignatius, how is your regulatory, I guess the environment for you? How do you deal with it? Is there anything particular that we'll find interesting about about the regulatory space for you?
Not at the moment, right? Just like in Genco's case, right? During the pandemic last year, where movements were restricted, food provisions, right, we're allowed to move and be transported across the country, right? We also benefited largely from that because a lot of the more traditional open markets were closed, obviously, right? We benefited from the fact that we were one of the very few parties that could get products to the retailer, right? So from that standpoint, I'm on Genco's side. We don't have a lot of regulatory issues in our markets, right? Regulation really goes towards the manufacturers of this product, right? And maybe some regulatory issues on how the vehicles that carry products and what permits they have to do all of that, but nothing significant that would impact the business negatively.
All right. So since regulation doesn't seem to be a problem, I think competition might be a problem for some of the companies. And for for Kobo 360 and Lorry, you guys are like the major digital logistics companies in your space. And I won't ask about competition between you guys. Well, what I'll ask is competition with other players, the traditional logistics companies that were there before you guys came into the market, right? So how often do you experience pushback from them? And what are your plans to expand your customer base and gain more market share as you continue to grow? Okay, so I think I will go with Leo first before Genco.
Excellent. So, like I mentioned earlier, it's an open sea, right? It's so huge. The vista to the chances of bumping into each other in a competitive manner barely doesn't exist between us and Kobo 360. I believe that we have more areas to collaborate and compete because the more we move the market from traditional to this tech-driven environment, the more our businesses grow, the more the industry is easier to regulate. You talked about regulation. And the more it's easier for the partners that are really critical to our growth to connect with the entire value chain, financing partners, whether it's asset financing partners, whether it's working capital financing partners, whether it is even consultants in the area of our journey management and all of these things. The more we move the entire industry into this space, the better for everybody. Talking about the reception that we got, it was interesting. When I joined in 2019, I had been on the client side most of my life, working at Nestle, Kimberly-Clark, and so on. And so I knew the problem that the typical supply chain manager was facing, and I approached the issues from that standpoint. But the traditional transporters and truck owners saw us as competition. It looked like a perfect marriage that you own assets. I have no intention to own assets. I want to provide you working capital and provide you on journey management, take away the hassle of finding cargo from you, take away the hassle of finding funding to move those cargo from you, and essentially midwife, be your back office, essentially, right? We thought that it was a very easy value proposition and they would quickly say, but that wasn't the case. There was always that pseudo analysis. What if you decide to buy trucks tomorrow and you kick me out of this space? And we're saying the day we do that is the day our business plan collapses, because that's not the problem in this space. We're coming to solve a problem. However, having over the few years we're here, validated that thesis over and over with them, we are seeing more collaboration between us and some of those players who at the beginning were quite resistant to us. And so we foresee in the near future where people will understand that this marriage just serves everyone's benefit. So far, so good. So far, so good.
Thank you.
Genco,
is it a marriage for you too?
No, I think I'm fully in agreement with Leonard. You know that both Lori and us, if you take Nigeria alone, I think we cover maybe 2% of the transport market together. So there is a lot to be done. A lot of people are still not on the platform. And I think there is more advantage to be on a platform, even if you don't if you don't trip all the time for that platform or the other one. You can also, a trucker can also have, let's say, half of his trucks on the platform and half not. But the advantage of being on the platform in both our cases is that the reverse logistic is important. When a truck goes from Lagos to Kano transporting finished goods, like from the port or from the factories in Lagos, let's say he transports noodles. He wants to come back with something. He may not have that client while the platform will have it. So there is sorghum to be transported back towards the brewers in Shagamu, for example. There is, if you manage that well, and I think that we are giving enough vision to the transporters about what is good for them to be on a platform, that we can only go together. I think that's a fair statement to say. The future is, you can only make money in two ways. You can only go in two ways. One is demographics. The other one is productivity gains. Productivity gains will come by being on the platform. Demographics will come from being on the platform because you will have more demand on the platform than you have normally.
All right. Thank you for that, Genco and you. I think Chibundu will take over.
Okay, so really interesting. Thank you very much. I guess where people are really interested in now, especially with all the money that's going around in Africa, and I want to start with Tayo. Where are you in your fundraising journey, and what are your fundraising plans in terms of geographies? Where are you looking at? What is exciting currently? I'd like to know, where Moove is going in terms of geographies.
Absolutely.
Sorry, just chip in. Tayo, it won't be bad if you guys reach Series B this year, right?
Of course. What to say? On a serious note, we recently closed a $23 million Series A round. So we're really thankful to our investors there for all the support they have shown us on all facets. I think the focus for us is one, to sort of take our past learnings, right, build on this. We're still scratching the surface in many places and cases and in many cities, right? So expand on that knowledge, right? Expand our base there, deepen the network effect with our partners and the existing our team. I think in terms of just expansion, right, geographically now, the goal is to still continue with our 11-city expansion plan alongside Uber, right, on this journey. So we've done 4 cities now, but there's so much more that we can do in these cities and even more. I think, just from an investment standpoint, so something that's actually key for us as we grow and scale the business, deepen our investments in technology, right? Strengthen the team, deepen our product knowledge across the board, and just make sure we have a sort of top-notch team that can help us, grow, stabilize the business, also bring value and create that desired mobility company, right? That's targeted at providing, democratizing our vehicle ownership for mobility entrepreneurs across the continent today. So that's the focus for the business.
Okay. Ignatius. So what are your plans, funding, geographies?
Okay, great. I'll take a piece of Tayo's book, right, because it's really important to consolidate on on already existing markets, right? And we are going in Nigeria, for example, we are already in 14 cities. Right? We take a city-to-city approach to expansion. In terms of other markets outside of the markets we're currently in, we would be looking to expand into, in the near future, Anglo and Francophone West Africa, as well as Southern Africa. Those would be our focus for expansion. In terms of fundraising, I think we are all always in the market to raise funds, right? We're all in a very capital intensive business, so we need to stay in the market. Genco, I'm sure spends the most time on the road seeking investors or looking for investors and looking for the right partners, right? Because aside the funds that come in, right, having the right partners that understand the business model to drive you to the next level is really important. So we're constantly in the market. So I know that's political for Tage, but yeah.
Okay, Genco, please.
All right. So, well, thank you very much. I mean, fully in agreement, right? I mean, effectively, you know, there is a strange thing. First of all, we obviously are looking for investors because we are raising the Series B at this moment as we speak. And I mean, I think that we're talking about 40 million fresh money coming in, between 40 and 50, I should say. So, but I don't want to comment more until you see it in the press. I'll speak with Tage at the right moment about it. And I think what is important effectively is to find the right investors for us. That's very key. And in terms of the expansion plans, you know, the improvement of the technology is always important. Adding up new products and making sure that they're technology-wise sound, like in the fintech space. If we come into, for example, if we add products to our value-added services, can they sustain being? Will they be financially or technologically solid? All these kind of things have to be worked on, and there's a number of money that will go into there. Otherwise, you know, we are also obviously capital-intensive companies, which means that the money that you get from investors should be used as a war chest to negotiate with the banks and get the cheapest financing possibilities you can find, right? And access eventually public markets like capital markets, commercial papers, or bonds, if you have a rating and are able to access those funds. So I think that the financial markets in Nigeria are ready for innovation, but also are quite good because there is a growing pension fund universe in Nigeria that is demanding for new investment outside of government bonds and the equity market. So I think that we are in a good space, and the rest of Africa also expanding in. So what we want to expand obviously is penetrate better value-added services in the countries where we are already, and then going into new countries in Africa, for example, Benin, Egypt, eventually, why not? Yeah.
Understood. Leo.
Yeah. Okay. So one of the things Lori takes pride in is in our technology itself as a product, right? So one of our growth strategies is expansion, geographical expansion, but via technology. So you may have read about our licensing deal with Imperial Logistics, the largest logistics business in Africa, which effectively gives us a footprint in 7 countries in Southern Africa. Outside of these, our core areas of focus still remains East and West Africa, where, like similar strategy to Genco, we want to deepen our presence in this market. The market is just so huge, so massive, and what we're doing is working. So talking about investment opportunities financing, when you look at our growth trajectory, like I mentioned earlier, as an investor, you'll be interested. So are we getting interest from parties that we feel are viable investors? Answer to that is a yes. But we also have internal milestones that we want to reach before we get too active in the space, so that we don't we are able to really get to a point where we understand fully that we can sustain what we have achieved. So those internal milestones are also at the back of our heads, while we are not averse to new money coming into our business anytime soon.
All right, let me chip in one thing or ask one question. I mean, since everyone is in the business of kind of giving some form of financing to their drivers, or partners or stakeholders, right? I just want to know if anybody has any plans for raising debt financing, because I know in the Kobo raised something like that in the previous round. I don't know if there are plans to raise more debt finance to operate here. For anybody, just if you have any that's in your plans.
Yes, I mean, essentially, like I think Genco mentioned something like that while talking. So we're using domestic debt financing for funding these operations on behalf of these transporters. Essentially, what you want to do is use your equity as a hedge for accessing cheaper rates domestically, and then so that you are spared exchange rate risks along with the risk associated with financing in general. So yes, banks have been good facilitators of the process. A number of banks are open to innovative ways to work. We're happy. At least Nigerian banks have been good supporters of the process. And I think the numbers also have aided that project, made them believers. During COVID, we hit a small hiccup. We dropped volumes not because goods were not available to be moved, but because financing, the financiers, banks particularly, hunkered down along with the rest of the business, and that affected us. But I think for now, the business model is proven enough for them, particularly in Nigeria, and we're enjoying relatively good support. So if there are any bankers here who want more of that kind of support, to help fund growth. Yeah.
Okay.
All right. I think Chibundu will take over now.
Okay. So it's really interesting, and I think we're all excited because, as Genjo said, as Leo said, you're still a very small part of the market, so there's so much potential in Tayo and Ignatius too. There's so much potential with your businesses, and we do want to watch and see as your companies grow. We at RankUp are very, very grateful for your presence. We are very appreciative of you coming in, and we've found you very interesting, and we are looking forward to further conversations down the line. I want to leave Tage to say just one last comment before I wrap it up. This is a very interesting panel.
Yeah, I mean, I think in the beginning I said it's been interesting to see how these companies have evolved over time. I think some of them, got founded before I started reporting in tech, and even now, I mean, everyone is still acting strong in quotes, and there's still room to grow for each and every company. So I just hope regulation doesn't catch up with anybody, right? And your businesses work strong. Yeah, I think that's all I would say.
Okay. We'd like to thank you all. We are very grateful. Thank you, Ignatius. Thank you, Tara. Thank you, Leo, and thank you, Genjo. Tage, thank you so much for being on the call. And we'll wrap it up there. Thank you.
All right.
Thank you very much, everyone.
Thanks, everyone. Have a good one.
Thank you, guys.
Thank you. Bye-bye.
Bye-bye.